Sir, we are starting, sir.
Yeah.
Yeah. So, good evening to all of you. We welcome all to the 17th Vasudhaiva Kutumbakam webinar series conducted by the Sustainability Standard Board ICMAI. Today, we have the topic of ESG and PSUs. And we have with us our member CMA R. Ram Ganesh, who is our Company Secretary of Kerala Beverages MMM Company Limited. We also have the presence of CMA Dr. Aditi Dasgupta, the Joint Director of ICMAI, and we also thank our Chairman CMA Dr. Ashish Thatte for always motivating us to organize the online events every month on this Vasudhaiva Kutumbakam series on second and fourth Fridays. Before we start the formal session, we start with our institute's anthem.
सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय.
Just to share our speaker for today, CMA Ram Ganesh profile with you. Sri R. Ram Ganesh is a graduate in commerce, is a fellow member of ICSI, a fellow member of ICMAI, certificate management accountant of Institute of Management Accountant US. He also holds diploma in forensic audit, internal audit, information system and security audit. He also has certification in labor laws from ICSI. He is also a certified credit professional, risk professional, accounting and audit professional, and a treasury professional from the Indian Institute of Banking and Finance. He is presently working as company secretary with Kerala State Beverages Corporation, that is MMM Corporation Limited. He has also worked with Kerala Financial Corporation, Madras Fertilizers Limited, Kerala State Backward Classes Development Corporation Limited, Kerala State Development Corporation for SC and STs Limited, KTDFCs, Suntech Business Solutions Private Limited, Punalur Paper Mills Limited, and Malayalam Communications Limited, and has more than 14 years of experience in secretarial, legal, and finance portfolios in various sectors. He cleared all the groups of company secretaryship examination in the first attempt and acquired membership at the age of 21. Since then, he has been actively involved in coaching and training the budding corporate professionals across Kerala. He is a regular faculty for company law and labor law for the ICSI and ICMAI Thrissur and Thiruvananthapuram chapter. He was a visiting faculty for company law and securities law for Logic School of Management Ernakulam and IIT Campus Kollam for the final students of all the three professional courses. He is also a trainer for MBA students in the John Matthias Center, Thrissur. During his tenure in the KSDC for SC and ST Limited, he has received good service entry from the government of Kerala for effectively managing the financial management and streamlining the accounts finalization process. He has handled more than 100 sessions on various topics across all the professional forums in Kerala. His subject of keen interest is merger and amalgamation and Ind AS. With this, we welcome Ram Ganesh sir. And I think today's session would be value added for all the persons who are attending today's session. Over to you, sir.
Thank you so much. I hope I'm loud and clear and I'm visible also, right?
Yes, yes, sir. Feasible, sir.
Thank you so much. First of all, I'll just share my PPT.
Yes, yes.
Hope it's visible, right?
Sir,
Is it
please
visible?
share. Please share your PPT, sir. In the share option. The share option you have to go.
Yeah.
Yes, now it is coming.
It's clear, right?
Yes, sir.
So thank you so much, Sri Gurubhyo Namaha. I take this opportunity to thank the Institute of Cost Accounts of India. I feel I'm honored to take a session on ESG being organized by SSB of our institute. And I have to thank the chairman, Ashish sir, Ranjit sir, for giving me this opportunity. We know ESG is a hot topic. It has been in its limelight from 2020-21 itself. Like how CSR was a hot topic a decade back, ESG is also now becoming a very hot cake, I have to say, in midst of the professionals, especially not only in the national scenario, but also in the global scenario. ESG has been given a very huge importance. And I know in India, it is gradually picking up its pace, but I think it has to move to the next gear. It has to accelerate such that it has to surpass the boundary of the phase 5 restriction. Now that the top 1,000 listed companies, we know that every now and then, every week there is an IPO. So there are more and more IPOs are hitting. Now we know the Bajaj Finserv, it has come with an enormous oversubscription. So likewise, every week, and now that Swiggy is coming up, now that Hyundai is coming up with IPO. So every now and then the listed companies are hitting the market. So there has been, now that Sensex has moved up to 85,000 points. So my thing is that the top 1,000 listed companies are getting at a very hotter seat. And the thing which I was coming to say is the ESG is now mandated top 1,000. It has to surpass that boundary. The next level we have to reach. The thing is that we have a target of 2070. Our Honorable Prime Minister had been to Glasgow Summit, wherein he has given that we'll achieve a net zero, that is no carbon emissions by 2070. That is the target that we have. So initially we have taken off. Of course, the speed is not as much, but of course, we have seen some tremendous activities in the private sector. Of course, we'll just analyze how far it has reached the PSU. That is the main topic for the day. And also, I'll not say it's a misconception, but we can say that ESG, it is into the environmental boundary. Actually, it is not, because there are three components basically: environmental, social, and governance is there. But basically, what we think of ESG is we will actually curtail our mind or our thinking only to the environment perspective. There is a far-reaching impact on the social and governance perspective, which obviously you have having this sessions, back-to-back sessions every fortnightly by SSB. Of course, that importance has been given into social and governance scenario. The layman's mindset, or those who have not actually not explored, they stick on only to the pollution, recyclement, sustainability, environment. But there is another vertical that is actually need to be explored in the same way in which the environmental perspective also which has been explored. That is the social and governance perspective, which definitely is a huge opportunity for the PSU. And the major words or the major things that will actually come to our mind when we say the word ESG is ecosystem, ecological balance, pollution, safety, wastage, employees, training. So these are the major words that will actually coming to our mind, right? ESG. Of course, it is the blend those that ESG, the concept is entirely the blend of those words only, but there are bit more technicalities. Of course, we will cover in the perspective of PSU. And this is actually an extension of what is that the global warming. Of course, again, global warming is only environmental, but ESG is covering far more that is social and governance issue, where I just have to bring down two examples which had actually taken place, of course, in my state. That is the landslide that has actually happened in Wayanad district. You might be knowing around more than 500 or near 750, they have lost their lives. Of course, there's an environmental factor is there. And the latest 2 weeks back, we are well aware about what has happened in EY. One employee actually succumbed to death. I should not say it is succumbed, but yeah, of course, because of depression, she lost her life. That, I mean, in that point also, of course, ESG has a role to play. I'll just connect all these points during my session. But of course, the work pressure being faced by the employees and the environmental things, Wayanad. So these things actually we can club in the ESG perspective. And there are a bit more thing that is renewable energy, how far we are emitting the pollutants. These are the technical side of ESG. And we know that Indian corporates, they have, I'm just giving an introduction. I'll not take much time on the introduction. I'll move on to the slide, but I just want to start how we have been exposed to ESG. So after that, some few more points, I'll directly go to the slide. I have only very few slides to present, but I'm just giving an introduction how to move about. So we have now the Indian corporates exposed to ESG. We know that Honorable Prime Minister in the Glasgow Summit, we have a target of 2070. But in the meanwhile, we should be always well aware about the target that has been set by other countries as well. The European and American Union, they have set the target at 2050. China has given a target of 2060. So we have just set the target because of the ecosystem that we have in the corporate sector, or because of the that land, and because of the corporate scenario. We know that how far a corporate can adopt to the standard set. So we have set a comfortable, I'll not say it is comfortable, but we have set a target of 2070, because of which the ESG norms and ESG scoring, ESG credit, all these things are getting into play. The words such as GRI and TCSD is all coming into our brain. This is one thing. And this is nothing but we know the Basel III norms. We know how IFRS has come into after that Ind AS, I mean IFRS convergence. We know about Uniform Civil Code. So these things are slowly actually taking off. This is into a better governance perspective, and in the same line only ESG is also meant to. This is also we have a target. And we know now coming to the main core topic, that is the PSU. How far the PSU is aligned to ESG? Where is the position of PSU? Whether they are aligned with the ESG guideline, whether they are setting their operations in line with the ESG guidelines, ESG standards. So in that, PSU have a very vital role to play. But we know, though, because of many perspectives, that is, one is employment. Of course, it is being said that in Kerala state, almost 80% of the budget or 80% of the total income will be going to the salary hands of the government employees. Okay, of course, I mean, we know it is a consuming state, not a production state, but the scenario may be different in other states. I'm just quoting my state as an example. The thing is that the majority of the employment is from the, they are in the PSU. That is one thing. And secondly, the transparency, all the policies are being implemented in the PSUs only. So only from PSUs that has go, I mean, that should go to the private sector. But in India, the scenario is slightly different. Of course, the PS, I mean,
excuse me, sir.
Yeah.
1 second.
Yeah.
Kindly put your camera on.
Oh my God, sorry. Now it's fine, right?
Yes, sir.
Your PPT also, sir. mode. PPT mode also. I think you have clicked.
Now it's fine. Now is
No,
it fine?
sir. No, sir. Kindly click your PPT, sir.
Yeah. Please share your PPT, sir. This share option, you click on that file only, sir. So you can share with me. I will share on your behalf.
It was visible right before I switched on the video.
It is visible, but it was
Not in the PPT mode.
yeah, not in the PPT.
How about now?
Still not, sir.
No.
So you click on that exact file, sir. That I think your full video is visible, full with all the content.
Anyway, I'll be sharing that slide to you.
Now it's okay, sir.
Now, is it visible?
Yes, sir.
Yes.
Okay, just a moment. Full screen is visible, right?
Yes, full screen, sir.
Okay, fine. Okay. So I was actually saying about the PSU's exposure. Okay. So majority of the employees in majority of the states, or might be in few states, they are with the PSUs. So when the central government puts some policies, of course, that would impact the PSU. But ESG is also a biggest vision which is being set by the government. So it is the PSU, from the PSU only it has to flow to the end of private companies. But we have to analyze the gap of how PSU has set their hands and where is the position of private companies basically. And I hope the slide is visible, right? The agenda slide is visible, right?
Yes,
good.
Yes,
So this is the agenda for the day. One, of course, we have elaborately discussed, we have introduced what is ESG. Again, for the sake of the slide, we'll have a technical introduction to ESG. And second one, what is the connectivity of ESG and PSU? That will also get covered. And third, we'll literally with data, we'll compare where is PSU and where is private company in place with respect to ESG. And if at all there is a gap, if we analyze, what are the gearing avenues for PSUs in ESG? And what are the basic challenges for the general challenge that we have in ESG? And in specific to PSU, what are the challenges and how they can overcome? This is the agenda for the day, which would actually cover the theme of the session. Right. And one thing which is actually a problem for the mindset of PSU is the selling pressure that has been given by the central government. Now, majority of, not the majority, but few of the PSUs, they are having a for sale board on their neck. But the government has not taken a hard and fast rule to sell those central government PSUs, but it is on the threat. So that is a mindset that someday or another, this PSU may get a label for a closure. So that is one thing that is actually pushing them back. Pulling them back. That is one thing. But this is to be taken the other way. There is also an equal pressure that if the company or the corporate or the PSU, when it's become profitable, that actually, if the government takes a view that if it is profitable and if they can come out of the negative net worth, they will remain as such. So that this tone has actually gone into the central PSUs or other PSUs, which has actually made some fire in the belly. It was, I can definitely say in the last 10 to 15 years, the of course, few corporates are exemption, but it has the modus operandi of operations of the employees, the transparency, and there are vigilance mechanism, and there are review meetings, the DP, the way in which DP works, in line with the vision of central government. This has made, I have to say, visible change in the PSU sector. It has actually pushed the employees. It is definitely, we can say, it is not very easy to work in PSU. It is, of course, there is a concept of security. There is a concept of leave. Of course, you are getting DA, enhanced DA every 3 months or 6 months, depending upon the company. But there is a target being set. We have performance incentive in place. The government has made a mechanism in such a way that ministry, whether it is administrative ministry, whether it is DPE, they are actually governing the PSU properly. This had actually made the momentum shift in the PSU, which we have to admit in the last 10 to 15 years, definitely we have to say. So this, that pressure, or that we'll say the fire in the belly has slightly made the PSU go in line with the vision. But whether they are catching up with the pace of the private companies, that we'll analyze in the next slide, right? And whether they are responsive enough, whether the PSU are responsive to the directions of the government. Of course, if there is a circular being issued by DPE, of course, they'll set the target. But whether they are in line with the vision, that we have to see, right? And this is about the agenda for the day. Now we'll technically analyze ESG, right? So that we can go deeply into the PSU and private company comparison. Yes, we know about CSR. It has come from 1/4/2014, section 135, schedule 7. We all are well aware about or well informed about the CSR. CSR is actually, I can definitely say it is an inversely relation by concept to CSD, to ESD. Because CSR, when you have profits, you give to the society. Okay, when you are running at a profit, 3 years profit or average profits, take the average, 2%, you have to give to the society. So that is putting a mandate to all the companies that when you are running at a profit, you have to give to society. But ESG is slightly the other way different, because ESG is saying if you want to survive, you have to comply with the ESG standards. Okay, and there will be a ESG score, you will be analyzed. Okay, so if you are surviving, the society must get improved. That is CSR. The other way ESG is, if you want to survive, you have to comply ESG. This is the a slight ironical concept difference between ESG and CSR. Right, and we know that there are grades given, there are marks given for the students who are actually performing at the school level or the college level, or of course for the professional. Likewise, ESG is also a scorecard to analyze how much a company is balanced. It is not that they are reflecting some profits, they have got some projects, they are shining with more than 1 lakh rupees in the market, they have surpassed the what to say, the market capitalization. But ESG is actually a different scenario. Whether they are having a balanced portfolio, whether their balance sheet is actually is complying, it is not only taking care of the financials, but whether it is actually responsible to the environment, society, and also governance perspective is very, very important, which I can definitely give a very, I can give a very layman's example. He is having, tremendous amount of qualifications. He is a triplet and he is having a doctorate. He or she is having multiple diploma courses, certification courses. But if the character is bad, then everything is bad, right? So there is no use of, or there is no purpose to be served with those qualifications. Likewise, if a company is having a repeated dividend history, of course, it is going for a right issue. It is going for any bond. It is reporting profits. But in other way, if the ESG score, of course, this has not come into play, but I'm just saying what will be ESG in the future. So that is what is ESG all about. Whether the company is balanced is what is being analyzed in particular scenario. Oh, and so when there is an ESG comparison, of course, not only the financials, but the quality of assets is very, very important. Second, what are the efforts that are being taken by that company to preserve a society in a governance perspective, whether the employees are actually happy and whether the stakeholders are getting all the information that they are seeking. So these are the different verticals in which an entity will be measured once the ESG is in full swing. That is one thing. Second, definitely it will encompass climate change. Of course, in an IT company, I don't know how far a climate change it has, but of course we have to appreciate. I'll just take you to the Infosys initiative later on. But how far a corporate can encompass the climate change challenges, whether it is by way of culture, it is very good. Whether by way of policy that they are implementing, they are sticking to the governance standards. This is also being measured by way of ESG. Now, very, very important, net zero. Net zero, we know we have a target of 2070. We are saying that by 2070, we will not be emitting any carbons in the air, or we will be the no pollutant corporate environment that we have. Is the target that we have. This is nothing but we are setting a goal that we'll invest. It's also very important for life as well. We'll invest in those assets which has actually life, but it is not dangerous to others also, right? This is very, we can definitely say our parental guidance, right? You have to go for a productive investment, which actually do not give you a luxury, but which actually serves you more, and which will not harm you or harm external environment. This is what is the net zero and sustainable investing all about. This is also being covered in the ESG perspective. Now, we know ESG metrics have also come into being. I have to appreciate here in the NTPC initiative that they are not only being guided by the SEBI LODR in their BRSR report. There are being measures taken to go up the ladder in the ESG metrics, which of course we'll cover. And how many of you know about the point that there is a separate index for ESG in the NSE platform, which we'll definitely take into play, and we'll see how far the PSUs and the private sectors are in there, right? Now we know there is a task force being set for the climate-related financial disclosure. That is also being. I'm not going deep into the TCFD and Sustainability Accounting Standards Board. Because of that only, of course, we are listening to the session. We have a standard. We are definitely evaluating the PSUs, how far they are sustainable, right? And very, very important is the CDP and GRI, Global Reporting Initiative and Carbon Disclosure Project. Okay, definitely these are two NGOs which are actually globally incorporated to analyze. Of course, they'll act as a consultancy organization which will guide you how to reduce the emission, and they will score you and they will evaluate how far you are compliant in the sustainable point of view. So this is the a broad explanation about CSD. I'll move to the next slide. That is actually how far the ESG and PSU are connected. I'll just take a quote from one of the movie, which was released in Tamil language some 5 to 6 years back. So there, that particular actor, or I have to say it's a hero, he said that it is unbelievable that, because he was referring to a foreign citizen conversation, and he was saying that it is unbelievable. I mean, it is being said by a foreign citizen. Okay, he is actually saying that it is unbelievable to believe that how a private hospital, I'm saying about a hospital, Medicare facilities, how a private hospital can give a facility that is being given by a government hospital. So this is what he was actually amazed into. I mean, I'm just referring to the dialogue in a movie called Thani Uruvan, where he was saying, after passing the civil service, he was saying that a Singapore citizen was saying that he is so amazed that how can a private hospital can give a facility which a government hospital cannot give. So this is the perspective of a foreign country in even a Medicare facility. So when bringing out to the ESG perspective, we have to know how a private company can devise its mechanism to comply ESG and not PSU, or why PSU is lagging behind to the initiative. I will never say it is lagging behind, but it is picking up pace, but it is very slowly, not in the expected level. How a PSU is slightly lagging behind the private company's initiative, or what are the efforts that can be done. So the first point, how it is being connected, is public interest project. We know that all the public sector projects, whether it is a road, whether it is a dam, infrastructure, a railway, everything is actually having a public interest project. So this has actually an impact across the nation, and these are all being dealt by the PSUs, like IRCTC. We can say it is SAIL, we can say it is a BHEL, we can say it is a BPCL. So all these big projects are being handled by PSU, but how much they are connected to the vision of ESG? This is what we have to say. So how they are connected? Of course, all the public interest projects are being handled by PSUs only. Huge investments. I mean, it is very difficult to actually to estimate the support that is being given by a central government company to PSU, and how far the private companies are raising finance in the market. It is something very huge. The planned funds that the government has to the PSU, the gap between the amount that is being raised by a private company in the market and a planned fund being set aside by the central government to PSU, that also we can definitely say that planned funds can be put into use by PSU for this ESG also, of course, to meet the target. And we know the large scale employment, majority of course, I have said about my state, majority of the capital cities, except few capitals in the state, that they are a government servant, right? So having this much proportionate government service, why the PSU are lagging behind, or how far it is into the vision to achieve that target set by the central government. And we know about the social impact, and of course, for anything and everything, all the policies, of course, PSU are the implementing agencies, right? Even if it is so, where is PSU on achieving the ESG target? This is what is the question, $1 million question. Now we'll definitely analyze this. I have to say it is the a major slides that we have to see. ESG in private company and ESG in PSU. Of course, we have an age-old custom that those people who are actually working hard in a PSU, we'll convince him by saying that, look, only you are working hard. So we definitely know that there are other people who are idle, but we know only when it is given to you, the mission will be accomplished. So we'll convince him by saying that, and what we'll do, instead of giving him a prime responsibility, we will give all the additional charge. This is what is being happening in the ESGs in PSUs also. There is no clear-cut responsibility being given when compared to private companies. This is an evident truth that we have to admit. This is not a negative perspective, but this is the fact. Whether an exclusive charge like a private company is given, whether we are taking a resource exclusively for ESG, like what is being done in private company, whether we are doing the same in PSU, that is the question. But in a private company, an exclusive ESG head is there. He is not only an ESG head, but he will be a matter of sustainability. He know how to, he'll be a head of recycling also. So these kind of new innovations must come into the PSUs. Second, ESG strategies, how far a private company is aggressive to achieve the net zero of 2070. We know Reliance, it is they have set a target of 2035, right? When European Union and America has set a target of 2050, China has set a target of 2060. When India has set a target of 2070, 35 years prior to that, Reliance has said that they will achieve net zero by 2035. This is the aggressiveness. This is in the blood of a private company. Whether we have to inject that particular vaccination in the PSU is a question. And we know there are companies, there are corporates who are actually, they will acquire only the ESG assets, which we told that, of course, the sustainability factor, they will keep it in the brain, they'll keep it in the heart, they'll keep it in the policy, and they'll keep that in their policy, in their book, and then only they'll invest into assets. It is not that they'll just acquire assets and implement the policies. They'll acquire the assets, they will make their even building, which I'll definitely explain the case of Infosys. They have designed their building that it is net zero in all the perspective, right? This is the mindset that that has to come. And they'll also analyze and evaluate how far their compounded annual growth return rate. Okay, whether this ESG asset has given the growth in line with their investment, whether it is actually preventing the pollution, how far they have come forward year on year, month on month, day on day. So these kind of a minute evaluation need to be there in PSUs. Of course, it is well established in ESG, right? And now very, very important, green bonds. We all know it is an initiative on those projects which are meant for environment protection. This is actually a, we have to say it is a SEBI data. I hope it is visible, right?
Yes,
Hello?
sir. Yes, sir.
Yes,
It's
fine.
visible, sir.
So yeah, so we have to just analyze when we see that around 6,128 crores is the amount that has
Sir,
been
the
raised.
SEBI data is not visible. Are you showing
Data
the
is not.
SEBI data, sir?
Yeah.
Your slide is seen, but your SEBI data is not visible, sir.
The screen is not visible.
I mean, sir, the data which you want to show
Yeah.
is not visible, sir. But your ESG PPT is visible. And
Visible.
your screen is visible.
So I don't know what is the issue. Anyway, is it now visible?
No, sir.
No, fine. So actually, I have given some hyperlink that is actually very important. Just a moment. What I have done is I have shared my PPT to Dipantu sir. So can you take from him?
Yes, surely, sir. Just give me 1 minute.
I'm very sorry for the interruption.
It's okay, sir. Anyway, we are connecting with him.
Shall I stop sharing for the ease of convenience?
No, sir. You keep it like that. I'm just connecting. Sir, what you can do is kindly can you click on keep it in the share mode and kindly click on the SEBI page that you want to show.
Now is it visible now?
No, sir.
Teams is not as easy as Google Meet. I know that, but still.
But okay, then can you please stop sharing and again share your SEBI page like that?
But if I
Yeah, then it would be a problem. Yeah, it has come, sir. It has come. Great. Oh, just the previous thing which you did. Now it is on the PPT, sir.
it's on the
PPT,
PPT.
Front slide.
Now it is EST, right? Complete EST slide.
Yes, it's on that slide.
So now is it visible, SAP data?
No, but it came just now. Now it's not visible, sir.
Can you share from your end?
Yeah, share, sir. Can you please kindly mail it, sir?
I have just sent, WhatsApp to Dipanshu, sir.
Yeah, sir is not available over phone actually.
So can you just drop a message to my WhatsApp? Yeah, hi.
Yeah, yes. Sir, kindly mail it to that newsletter ID, sir. ssb.newsletters@icma.in.
I have to go to my mail. There is one SSB at ICMI.
No, it's ssb.newsletters.
Can you just drop a hi to my WhatsApp?
So unfortunately, I don't have your numbers.
9995.
Okay, sir. 1 minute,
Double
sir.
one.
Yes.
It is 9995.
Hmm.
Double one.
Yes.
6830. Hey members, I'm very sorry for the technical glitch.
Yes, sir. Hello.
Yes.
Sir,
Yes,
there is
sir.
a problem. Sir's another thing. He wants to show the SEBI data. It's not visible. So, sir has mailed you the PPT. Can you please kindly see, sir?
WhatsApp. WhatsApp. Deepetu sir can actually share to Aditi and she can share or the other way.
Aditi, can you see the PPT?
Yes, sir. Yes, sir.
Sir, you can continue. Sir.
Sir, go to the previous page, sir. Another one. Sir, yeah.
Exactly. So actually you can click on that AJ private 6128. You can see one dot there, right? Yeah, in between R is no, the other way. Yeah, no, to the left. Yeah.
Sir, is it visible, sir?
No,
But I can see, sir.
that is the thing.
Aditi, can you see? Hello.
No, sir. No,
Sir,
sir.
I can see that.
Fine then. Anyway, I'll just continue because there are certain things that I have hyperlinked. Can you share? I mean, can you see my slide actually?
Yes, your original slide is visible, sir.
Okay, so I am trying again. Now is it visible? No, right?
No, sir.
But SEBI data is not visible. Now you can see the actual slide.
Yeah, the actual slide which Dipendu sir is sharing it is visible.
Fine, then I'll just manage without hyperlink. I don't know how far I can go, but let me try. Okay. So I'll just continue because people are there on the line. So with respect to green bonds, there are more than I have to say 6,128 crores have been raised by way of green bonds. That is those debt instruments which have been raised by the companies for the projects for sustainability. This is one thing. And Rural Electrification Corporation, we have to appreciate that they are the first Indian PSU. They are the first Indian
Hello.
PSU. Yes, hello. I'm audible, right?
Yes, sir, you're audible.
Yeah, fine. So, and Rural Electrification Corporation is the first Indian PSU to actually raise green bonds in yen currency to the tune of actually $62.5 billion for their green project. So this is also the gap between, unfortunately, which I cannot share you the NSG index, where the top 10 companies, they form part of the private sector. So whether the green bonds, except REC, which I have to say, and now that an interesting thing that has come in NTPC, that they are raising 10,000 crores, okay, by way of for the green energy from the public, 10,000 crores they are raising. So slowly things are actually started geared up in PSUs also. The major thing that is actually pulling back, which we have already discussed, is the divestment threat. Whether by way of any cabinet decision on a very new horizon, there are chances that these PSUs may get shut down or can have a private hands into play. So this is also one thing that is actually PSU is having a very less morale when compared to private sector. And when you, unfortunately, I'm unable to show you the initiative that are being taken by private companies. There are systematic ESG manuals. There are systematic evaluation reporting mechanism in private sector where the PSUs need to develop in that particular angle. Now, the general challenges of ESG, whether it is for a public or for a private company, why ESG vision is not getting in the limelight. Of course, we are discussing, there are many webinars, but if it has to change or if it has to accelerate, that why ESG has to go little far. One, it is only for listed companies, right? Now it is mandated only for listed companies. It has to go, or it has to surpass that which I have explained in the initial remarks, that it has to surpass the boundary of the listed company. It has to come to the boundary of voluntary reporting. If a company is being voluntarily allowed, okay, to adopt the ESG metrics or ESG reporting, that can actually grow the knowledge of the other sectors as well. And why only corporates? That is very, very important question. Now that, of course, we know a major part of revenue is by way of corporate tax, but there are other sectors apart from corporate. There are MSME, of course, there are other unorganized sector that can also take the ESG. Of course, it is a challenge that how far an ESG can be implemented by a non-corporate, but if we give the energy, if we give the push to adopt ESG mechanism, of course, that challenge will be also dissolved. And very, very important that it is a basic question. Of course, we are in the 30% slab. Some are in 20%, some are in 10%, some are in 5%. We are paying income tax. But what is the return that is being received? Are we getting incentivized? Of course, I do remember some 5 to 6 years back, we have been getting bronze certificate for paying tax. So similarly, there should be incentives for all the amounts that we are spending. Of course, now that we are getting cashbacks for any purchase through Amazon or by way of any social purchase through platforms. So only when the incentivity is there. So definitely we'll analyze what do we have in return for the amount that we are spending, for the effort that we are taking. Of course, we are working for an institute, we are working for a corporate, we are working for an entity, we are taking an effort. What we are getting a salary. Now we'll evaluate whether we are putting efforts, whether it is an IRS or DRS, that is whether it is incremental return to scale or it is decrease return to scale. Whether we are being given the reward for the effort that we are putting. That is the question that is actually coming. This is actually applicable for ESG also. When you give the credit for the amount and the effort that a corporate is taking for the ESG implementation, whether we are whether we are giving incentives for ESG. So that will actually boost up the morale of corporate, which will be actually voluntarily taken by those companies when it is only limited to listed companies or top 1,000, right? This is actually being given. It took 7 years for companies or Minister of Corporate Affairs to give the spillover benefits. That is, when a company is spending excess of the amount that is being mandated, it can carry forward the amount for the next 3 years. Likewise, an incentivity or credit must be given for the ESG also, so that it will get more publicity and that will be implemented in a positive manner. And of course, we know now that all the ups and downs in the stock market, that is based upon the quarterly results. We know how far the market expectation, what is the results being published. So it is based upon the auditor's remark. Of course, it is the unaudited for the quarterly and audited during the financial, year end. Likewise, for all the limited review that an auditor is giving, the ESG implementation, how far an initiative that is being taken by a corporate in the ESG sector need to be also included. That will gear up the ESG initiative of all the corporate. We know we have a mechanism that only when it is being mandated we'll do, right? Similarly, when these points related to ESG are being incorporated in the reports, remarks, so this kind will actually put that fire in the belly of the PSUs and all the other corporate. And there should be, we had actually peer review audit for the practicing professionals. Likewise, there should be a voluntary audit for the ESG also. Many companies, and there should be an ESG certification, and that professionals, there should be courses for ESGs, and there should be a team-based audit for ESG also, which will actually give a self-evaluation. Where do we stand in the ESG vision? These are the general challenges that we have to speak. Now, there are some actually model PSUs in ESG. Unfortunately, I have given the hyperlink to exhibit what are all the initiatives that has been taken by NTPC, Steel Authority of India Limited, BPCL, and of course Infosys. So when comparing to these 3 PSUs, where is the Infosys? I am not going for an apple-to-apple comparison, but I am just putting into whether they are into papers. I'm not at all criticizing that they are into papers and they are implemented. This is the gap between the implementation. NTPC, they have a very brighter plan that they'll achieve, or they will lessen their emissions by 2032. Steel Authority of India Limited, they'll definitely take the carbon emission less by 2030-31, and they have set the target in line with Government of India 2070. BPCL, they have a very good sustainable developmental goal policy, which I'm unable to share, which I have already said because of the technical glitch. But Infosys, I have to say, we have to listen. There is a net zero design building that is being developed in Nagpur. So entirely, it is a net zero building. It is totally friendly with the environment. So this is actually learning and putting into place, right? We are learning, we are putting into papers, we are doing. But whether we have to show that we are really into the business, yes, Infosys has set an example. Definitely, you can Google that net zero design building in Nagpur, which I can actually I have actually hyperlinked the about the building perspective, the design, the perpendicular angles the Infosys have taken place. So this is actually putting into practice than putting into papers, right? So this is what is the major difference between the ESG practices in private companies and PSUs. And there are certain challenges to PSU, because this is not an avenue to criticize the PSU, but to evaluate PSU where it is on the ESG perspective. One is very, very important, that is whether they are being established for the commercial purpose or social objective. Many PSUs are actually finding difficulty in maintaining a balance between their commercial objective and social objective. Of course, PSU, they are using the public money, they are for the public, but in the other way, they have to show profits also. This maintaining balance difficulty is a very big challenge for PSU. Of course, I had been in the PSU for the last 13 to 14 years. This is the biggest challenge that a PSU has. Second, limited capacity, very, very important. Many PSUs, they have the talent in their board, in their resources, in their assets. They have a big horizons to expand, but they have a limited capacity. They have a circle ahead of them. They cannot jump outside that. I mean, with regard to decision making, with regard to their policy framework, with regard to their approvals. So in all these points which I have mentioned, they have a limited capacity in which they can actually operate. Of course, I have to say, there are fertilizer companies where I was working too. They cannot expand more than their territory because there is another fertilizer industry. That is not a challenge for a private company. They can start there and then and there. I mean, if they have a site that is actually comfortable, they can invest into, they can just come and operate. But it is not the way in which a PSU operate. And legacy issue, very important. Now, what is happening is, we know it is for 5 years. Every government is for a 5 years. Based upon the governmental policy, the PSU policy also change, right? And at the midst, the entire management will change, and their perspective will change, their vision will change. So what is happening in every 5 years is actually a re-engineering. Of course, re-engineering is the best thing that can happen in an entity, but starting from a scratch every 5 years, that is a challenge. This is the major lacuna. I mean, it's not a lacuna. It is a challenge for a PSU. Every 5 years, what is happening is, it is redevising its mechanism, right? And turnaround time for implementation. Sometimes the approval will take its own time. So that turnaround time is also a challenge or an impediment for a PSU to reach the ESG vision. And it is very important. We know that all the, not all the CPSUs and state PSUs are listed. Now that ESG is mandatory for only 1,000 listed companies. So this is also one impediment or challenge, that whether it is in line with the race of PSU, whether the PSU is in race with the private company, right? Now, this is a last slide where we can actually develop the avenues in PSU. One, it is about how we train, how we groom ourselves, right? So first of all, we have to make it in their blood that we have a vision, and our objective or our operations must be in line with the vision. So inculcating or amending all the provisions, right? Not amending, I have to say, we have to slightly make in the strategy that we have to make it inclined that all the visions are being, just a moment. Yeah, all their operations and objective are in line with the net zero vision. This is how we align our operations with the ESG vision. Second, there should be an exclusive vision and budget for their for an entity. Okay, it is, like what we have said, that we have what to say, there's a prototype budget and policies in our organization, especially in a PSU. So this ESG's vision must be incorporated in the operations, even in the budget and their vision also. Okay, so how far they will invest in ESG asset, whether there is a mechanism to evaluate the ESG investment. And third one, restructuring the board. Definitely all the board members and the senior executives must be given training, must be given knowledge. What to say, they have to get imparted in the ESG. Of course, I have attended 2 years back a session on ESG. So the entire board must be aware that their entity, their PSU need to be safely driven to the ESG vision. So there should be a restructuring of board in such a way that independent directors and the CMDs, director technical, director operations, they need to have an exposure in the ESG. These things will definitely change the mindset of the PSUs. And ESG audits and compliance, the PSU must exhibit itself or expose itself to the audits of ESG. Of course, we know that social audit is coming in one side. We know there is a concurrent audit. So in all the audits, all the checklist, the ESG must be in place. Okay, so the term ESG must be always there in every thick and thin of the PSUs, what we have to say. And we have to be very clear. I mean, wherever we invest, whatever that we invest, it should be an ESG based asset. It should be a productive asset. It should be a sustainable asset is what we have to make sure. And all the principles that we have, it's a 9 principle sector that we have in BRSR. All the performance activities, any step that we move into a very big project, if we are taking a very big project, that project, those who are actually, and we can do one thing also. If you're floating a tender, we have to float where the ESG operations are into place by the bidder, and whether in such a way that he can correlate with our ESG initiative. So this kind of vision change or a positive vibration in ESG can definitely put ESG in a better place and can match the race of private companies. This is what I have to say. I had actually a few data to show to you with respect to many PSU initiatives, especially REC, NTPC, and of course Infosys, which I missed because of the technical constraints. So with these words, I hope I have done justice in evaluating the PSUs and how far PSUs plays with the private companies. So thank you so much for the opportunity. I hope I have served my best limit. Thereby, I'm ending my session. Over to you, sir.
Thank you, sir. Yeah, thank you, sir. But we have certain questions from a few participants.
Okay.
I will just put some questions
Yeah.
so that the first, sir, in your presentation, sir, you have given net zero targets. Sir, what are the internal targets of net zero by PSUs? Because India by 2070 is planning to have a net zero, but internally, oil companies and other companies, those who are actually polluter companies, do you think that it is possible or feasible to reach the net zero targets?
Yeah, definitely. The target set is actually around some 50 years away, right? So definitely, if we are together, if the ESG concept is disseminated in a bit more serious manner, that is, which I have said, if it crosses the burden of being mandated only to 1,000 listed companies, if there are, efforts in such a way that it crosses that particular obstacle, and if it is being disseminated to the public in such a way that it is being mandated, 2070 is not impossible, sir. If there's another example that if Reliance can, I'm not saying, I'm not criticizing, or degrading, or I'm saying about Reliance. If that company, which age-old experience, which is having that much complicated structure in their organization, if they can achieve in 2035, definitely with lot of support from the government, lot of capital support, planned funds, many qualified professionals sitting in PSUs, that dream will definitely come into reality. 2070 is not an impossible target to achieve.
Right, sir. Sir, do any reporting standards are there for PSUs for this ESG parameters in their annual reports?
Definitely. That is what which I told in BRSR. That is for top 1,000 listed companies, they have to go for an integrated reporting, right? And if it is a top 1,000 listed companies, they have to include the BRSR report, which has 9 principles, wherein they will say whether there are any accidents, whether there are any training being given, whether they have taken any measures to improve sustainability, whether they have been penalized by any any tribunals because of their pollution, whether there are any accidents, whether there are any deaths. So there is a reporting standard. And if you are saying that if you are falling out of the box of top 1,000, they can definitely voluntarily comply the GRI initiative. They can definitely go and comply that CAP initiative. So there are many agencies which would actually support those companies which can take voluntarily ESG scoring. Now, how we take that credit rating from CIBIL and other credit rating agencies, likewise, there are agencies to support or to evaluate or for consultancy purpose to know where you are in the ESG compliance. So there are reporting standards for top 1000 listed companies by way of BRSR reporting, and there are other consultancy services being given by global service providers, which can actually evaluate where you are, like which I told about GRI and CAP.
Right, sir. Sir, in the last webinar, we had the concept called green costing. Sir, do you feel any PSUs are following that part, sir?
Which one, sir? Can you? I didn't get the word
costing. Green costing.
Green costing, sir. This is an extension of sustainability reporting only. How far that you are maintaining your accounts, or how far you are putting into practice your costing mechanism in line with the in such a way that it is protecting the environment. That concept is, of course, it is very easy to follow once you get the theme of it. Unfortunately, I don't have any data that a company is following green costing, but there are companies who are actually doing sustainability accounting. So that can be actually putting some designs into it. They can definitely be being termed as green costing. But at present, I don't have the data that a particular PSU or an entity is following green costing. But there are many companies, they are taking efforts, they are taking initiatives on sustainability reporting. So adding and fine tuning it, definitely it can be called as green costing, sir.
Right, sir. So another question has come, can the adoption of ESG principles help Indian PSUs transition towards a more sustainable and socially responsible business model? If so, how?
Definitely, sir. Yeah, definitely. And by how is that? Look, the whole, even if there are competitions between corporate to corporate, there are competitions between countries to countries, right? So how far a country, if a project is being taken, how far a company is acquainted in adopting the sustainability measures is being evaluated. So on adopting the ESG principles, and of course by a major companies, especially PSUs, it can put our country in a better position. And we know that the consultancy like CAP and GRI, which are based in UK and US, they will definitely evaluate not only the corporate, but where it is being incorporated. That will actually give a weightage to our country and put ahead of many countries by way of many evaluation criteria, is what I have to say.
Right, sir. So another question has come, what is the role of institutional investors in pushing for better ESG compliance among Indian PSUs?
Yeah, wonderful, sir. Look, this is the mindset of the stakeholders, right? So if an institutional investor or an incumbent investor takes a point that he will only invest into those companies which have adopted ESG principles, then only he will invest. But unfortunately, or we can actually expect in the time being, look, sir, how we give a plan to our local self-government. We are having a building plan, and we'll say to them that, yes, we have a rainwater harvesting facility in our house. Only then he will give a license, right? And if we have a mechanism to protect, or if we have a mechanism to that recycle, or we have a renewable resource facility, then only he will give a license. Likewise, if the regulatory authority, whether it is SEBI, whether it is RBI, or whether it is the stock exchanges, or whether it is the government, in fact, if they put a mechanism that only when the company has a policy in place for ESG, then only it will adopt, or then only it will allow the prospectus to be floated. In that manner, the institutional investor can definitely make his investment safe in the hands of the entity in which he is investing. I'll reproduce in another way. If the regulators puts into place that particular prospectus or that invitation to public, while evaluating it, it has a particular checklist that only when a company is well adopted, at least not for now, but I mean, at least in the future, that they have an ESG focus. Only then it will give green signal to float their prospectus in such a way. Not only the institutional investor, but also the government can confirm that definitely that company is ESG compliant or will be ESG compliant, is what I have to say.
Right, sir. Sir, another question has come. How do Indian PSUs integrate social responsibility into their operations, particularly in terms of community development and economic welfare, and also employee welfare?
So can you repeat the question?
Yeah. How do Indian PSUs integrate social responsibility into their operations, particularly in terms of community development and employee welfare?
Very interesting and important question, I have to say. Of course, PSU is having a legacy over the years. There are it is being incorporated long back. So those mini Ratna or Navaratna companies has an hereditary of management, right? So how means there is a specific interference of re-engineering their policies when they understand the concept of not only the CSR but also the ESG, whether sir, it is based on the data which is being given to the regulator by the PSU. It is being evaluated. But whether the data is being given on, whether it is fair and true in the true letter and spirit, then we can definitely confirm that it is in place. For example, sir, we have a parameter for evaluation, right? And now that we are evaluating ourselves, it is like self-evaluation that yes, we have achieved 10 out of 10. Yes, we have given adequate training to employees. Instead of that, against these criteria, if we are putting the actual figures, and if we have the concept of ESG in the policy, not only ESG, but also a general concept that we will be ethical towards our society and to the employees. And it all depends upon the vision of the management, sir. I have to say, it is upon the CMD or the top chief executives, if their mindset is positive, if they can take a lot of efforts, training, there's a lot of strain involved in re-engineering a PSU. It is not in a one new day they can totally change the PSU mindset. It depends upon how how much effort that they take to re-engineer the PSU. If that particular incumbent or the existing CMD or top executives can put their efforts in re-engineering their entire policy, including what you told about social, cultural issues, and also in training, that will give a paradigm shift to the PSU, sir, is what I have to say.
Right, sir. Sir, the final question. How does ESG performance impact the financial health and market perception of Indian PSUs?
Fine. Sir, now that we do not have a mandatory scoring of ESGs in Indian financials, now we have a set of reporting standards published by Institute of Chartered Accountants of India. We have a set of disclosure by ICMAI. We have a compliance report running, which is being issued by ICSI. But whether these are being, just what I said in the earlier stage, the major challenge is that there is no mandatory reporting for the ESG in the financials, not even for listed companies, but also for other entities, the unlisted companies also. When these are being mandated, or at least in the limited review on a quarterly basis, if there is a specific mention by the auditors, not only the statutory auditors, when there is a checklist that, or at least a remark that the effort that they have taken, so they have to give, sir, if they have not taken any initiative, we will be actually embarrassed to say we have taken zero efforts. So if it is being mandated in any of the reports or any of the statutory returns that we are filing, of course, we know that we'll never put zero against our name. So we'll at least take an initiative to take one. And if we have a mandatory field to attach the document that you have taken, So that will slowly incorporate in the financials as well. So we have an exclusive schedule 6, right? We have many division 1, division 2, division 3. We have a specific bifurcation of what is the default on the MSME, age-wise default of MSME. Likewise, what is the amount of investment of the physical assets? And if there is any specific disclosure of investment in ESG assets, that need to be disclosed by way of notes in the financials. That will slowly, not only for PSUs, but the other corporate, that will get merged into ESG visions. Now that we cannot actually say this is an ESG asset, because we are not having any mandatory scoring or evaluation. If we slowly put that evaluation measure into the auditing report or in our notes, that by that we'll slowly get inclined to the ESG initiatives, or we'll align to the ESG visions.
Thank you, sir. Thank you for giving a perspective of ESG by PSUs. And I think due to paucity of time, we could not delve deep, and due to some technical glitches also, we could not showcase various other parameters which you want to exhibit. Maybe in coming days, you will be coming with a good time frame so that we can also reach the areas which is still left uncovered. So just for information that SSB is doing a lot of activities in BFSI space. We are publishing our monthly newsletter like Sukhino Bhavantu every 25th of every month. This is the last issue which we have published, the September issue. And if you see this every month, we are including new corners thanks to our team members Aditi and Ranjit sir for their contribution for these issues, and our chairman also. So just to state, I request all the participants also to contribute for our articles in our Sukhino Bhavantu. We have also our ESG certificate course, which I think 15th October is the last date of the second batch admissions. We have adequate admissions. We will start the batch very soon. And I request all the participants to join for our ESG certificate course, which I think you can check our website, the SSB portal, where every details are provided, the course curriculum, and we are actually doing a 50 hours course, and the online link is also there for admissions, very nominally priced, and you can call me. Our numbers are also available in this. You can check our SSB portal for the brochure, and the further we are having the next this Vasudhaiva Kutumbakam 18th webinar on corporate social responsibility regulatory provisions, where Sri Naman Shah, Director Deloitte Haskins and Sales LLP, would be delivering his session. After that, we have on October 25th, Chandrasekhar Chincholkar, who is consultant, would be delving in an innovative topic, overview of green battery concept and its future in enhancing sustainability in India. And many of the other programs are also lined up in November, December, and January 2025. So I request all the participants to join in our future events. And to conclude today's webinar, I request Aditi Madam to give a snapshot of today's session and a vote of thanks. Over to you, Aditi Madam.
Thank you so much, sir. Thank you, Ganesh sir, for my heartfelt thanks for such an insightful and engaging speech, sir. And sir, your expertise and deep understanding on the subject matter has truly captivated all of us. Thank you very much, sir. We are grateful for the time and effort you dedicated in preparing and delivering such a thought-provoking presentation, sir.
Thank you.
Your contributions added immense value to our event, sir. And the way we got the questions got addressed, it's a great opportunity for all of us to add more value to our understanding, sir. And we look forward for the opportunity to learn from you again in the future. Thank you so much, sir.
Thank you. Thank you.
Before we wrap up, it's time to thank a few more. I would like to thank our President, CMA Vibhuti Bhushan Naik, sir, CMA TCS Srinivasa Prasad, sir, Vice President ICMAI, CMA Dr. Ashish B. Thatte, Chairman, Sustainability Standards Board, and all the members of the SSB. I would also like to thank the Secretary of SSB, CMA Dipendra, Additional Director, ICMAI, for the constant support and motivation. Thank you, everybody. Have a great weekend ahead.
Thank you.
sir.
Thank you.
Thank you, sir. Thank you. We are